You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributor to Backroom Technician. This week on the Biz Disability Insurance for Individuals series, our tribute to Disability Awareness Month for May 2013 with Marcy Pruitt, DI Diva.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And I did use the term DI Diva because this is all that Marcy does. Marcy, I have to say, well, first of all, welcome day 3. And I've never seen, everybody has their area of expertise. I have a general understanding of DI, but I would never hold myself out to your expertise. You are the diva that is DI. I mean, you just know all this stuff, and you are a sick person, I have to say. This is all you know, but you know it cold. Now, when we're talking, we talked a little about, and if you missed any of our intro show on Monday especially, I want you to watch them all. But if you missed Monday's show, I want you to hop out to thebiz.tv, watch our last couple shows, Monday, Tuesday show, so you can get an idea what we're talking about, because we kind of addressed the introduction to short-term DI. We're talking about short-term DI today. Now, why do I want to talk about this? Because sometimes people will go and look at stats. I'm looking at one right now from the Social Security system, and they say that the average duration is 31.2 months. Well, there's certain caveats to that statistic, but when I'm looking at short term, I keep thinking we should all at least have that. I mean, if you're walking out of that sale and not talking about at least the minimum, which is short term. I mean, yesterday we talked about, I think the longest one you said, Marcy, if I remember, on blue collar was 5 years. Right. Which in my view is kind of short term. So when we talk about short term, I know they're built into group plans and so forth. Right. But talk a little bit about short term planning for DI. We should be walking out at least with that kind of thinking.
Well, and again, I mean, we're advocates for long term. Mm-hmm. If you can't fund, 90 days in the bank or 6 months in the bank to pay your bills, which unfortunately a lot of Americans cannot, without equity in their homes, with their credit card debt and other debt service, many people can't go a month. So yes, short term would be important in that respect, but what would happen till retirement age? So we really focus on long term. The short term, again, is typically sold for more hands-on, blue-gray collar employees, and the workforce does a decent job with short-term plans or making available.
I'm looking at some curious stats, I have to say. I noticed that they break this down by ages between the ages of 5 and 17, that there's no disability. I'm thinking like, yeah, well, you haven't been to the ER with my kids, okay? Okay. But that aside, the regular workforce between 18 and 34 years, they have 95% of those people do not experience a DI claim. Now, but the moment you get past 34, it drops off like the table. I mean, I'm looking at these, and these are, again, for this short term. I mean, when you're looking at the percentage of people, when you start to get to about a third for people that are between 35 and 64, which is their main time of earnings. Right. Now, the reason I kind of bring this up is because you have to start looking at your earnings in the bigger picture. Okay? Now, we're talking about short term. We're going to get into long term tomorrow, and that's what we want to sell. But I'm trying to walk out of that office. I'm trying to walk away from that kitchen table with at least this. I want to be able to at least help people understand DI, at least short. I want to do it long term, but if you can't do it, you have to look at this. When I'm looking at this, I'm looking at income expenses going up every year, the cost of living, the inflationary rate. And so most people that can't afford long-term care, if they're not looking at this, they are really putting themselves in monster exposure, especially when you cross over 35.
Well, and to your point of the kids going to the ER and whatnot, there are disability plans and short-term plans, accident-only plans, and there's actually riders that a working parent can put their children on the disability plan for ER visits. And it's a schedule, broken arm, fall off the swing set, chip your tooth.
I'm sorry, this is new to me now. You just caught Steve Savant. I thought I was the font of all knowledge. I guess not. So you're saying on a standard DI, regular policy, as an adjunct rider,
Yes.
I could actually add on kids for the very reason.
Right. Illinois Mutual has a great product where
I
you
wish
can
I knew that
add
back
the
in the day.
children.
I
Right.
wish I
Add
knew
them
that.
on to for every ER visit or injury or accident for, again, a schedule of payment for those pesky little visits that add up that your insurance doesn't cover due to the deductible.
Well, when we talk about creating for our viewers who are financial advisors, I think most of them can say, listen, I'm kind of willing to wrap my head around the short term just because I think I could probably talk about it. It doesn't seem like forever. The price tag may not be as big.
Right.
How can I design something short term is there any way, I know there's differences because there's age differences, there's gender differences.
Right.
But when we're talking about short term, do I get any kind of economies of scale to discuss about a boilerplate, a template of what I can bring in as an opening salvo to this discussion?
Well, and funny, the number one question we get for short term is maternity covered? And on an individual plan,
That's the number one question?
because it's families planning and they know they're going to be going out. And for normal, not complications, for normal maternity, they are typically not covered in individual plans because the risk is there. Obviously,
Right.
a first day accident, 8th day illness, or a 15-day elimination period. So.
Well, I could totally see you trying to plan for that.
Right.
So, obviously you buy the policy and all of a sudden she becomes pregnant, right? So that's an issue. So maternity is the number one.
Well, that's the number one reason
Question.
we get calls and
Right.
that constantly.
All the time. But what would you say is that when we're trying to package something, if we're trying to build a short-term plan,
Right.
is it templatable? Is it boilerplatable so that we can come say, let's start with this?
Yes, typically a short wait. The typical would be a 30-day wait payable for 2 years with a partial benefit. Again, not the proportionate residual type coverage, but a good partial benefit, and offset against Social Security, offset against Workman's Comp. So it is boilerplate.
Well, so we can build something that'll make transition. I like that. When we come back from the break, we're going to continue our discussion with short-term disability insurance, part of our DI series with Marcy Pruitt. And don't forget to enroll at IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Marcy Pruitt. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on the background technician icon that's on the Biz blog for your 30-day free trial for access to the best needs analysis and sales support materials for financial planning. I use this, have been using it for 22 years. We're even using it in part of our show. I've used it for my CE filings. I've used it for the shows. I've done it for seminars, public and wholesale. It's just an excellent piece. And believe you me, if you're going to fall in love with it like I have, $50 a month, the #1 resource, and compliance loves it because you don't have to write about these things. It's already written for you. And before you move thinking about compliance, before you move forward with anything you hear on this show, always consult your tax advisor and or your broker-dealer compliance department if you're so FINRA licensed. We're talking about short-term disability. And why are we talking about this short-term disability as part of our DI series with Marcy Pruitt? We're talking about it because Many times we're overwhelmed by long-term disability. We don't know how to explain it. There's so many moving parts. We think we can't get it done. And people are starting to say, listen, I at least want to walk out of there with something. I'd rather sell permanent life insurance, but a lot of times I wind up selling term.
Right.
I would like to sell long-term disability, but sometimes I got to give something as an alternative. I don't want people to keep relying on Aflac, and I think that's a mistake. So let's talk about it. Let's build out a few things. We were talking about 5 years, pretty much your outside period for short term. Talk a little bit about how am I building this, because it's pretty basic. I don't have to be a genius here to sell this. I just want to be able to talk about it.
Right. Well, and really just to keep it simple. So as we discussed the long term, and it was about 2.5% of your income to insure 60%, well, we're covering a lesser income replacement, but it's only going to cost also about 1% of your income. So designing a plan, really keeping it simple so it will cover you, for the short term. And a lot of blue gray collar, that's all they can afford, or that's all they need, because the likelihood of Social Security kicking in is much greater.
Now, when I think about when I'm constructing this, and I'm gonna not pretend here, I'm not really, a DI seller per se, and I say that with shame in front of my audience. So I want to be able to dip my toe into DI. I might have a phobia that I don't know if they're ready for long term. We're going to talk about that tomorrow. But now I open up with my 5-year, let's say my 5-year plan. 30-day elimination period, is that a pretty good
30-day. There might be a 15-day with a 2-year benefit period, but typically 30 days to take you out to 5 years.
So I kind of like the way to open up with maybe the ability to say, hey, if you're out 2 weeks, there is a 2-year plan, but you could have a 15-day elimination period.
Right.
I mean, I actually find that appealing all of a sudden on the air. I mean, I think that's something that I want to be able to walk out. I don't want to always depend on Social Security DI. I don't want to do the Aflac of the world, unless they want to pay me for that commercial break. But I'm looking for the time where then your cost goes down, because generally we talked at the beginning of the week, we were introducing people to DI. We're saying, oh, that costs about 2.5%. So whatever your income is, you're going to have to spend 2.5% to protect your paycheck.
Right.
In this case, because shorter period, it's much more boilerplated. We're looking at what? 1%?
Right, 1%. Considerably less. And the boilerplate plan design, you would not add all the bells and whistles. So a guaranteed renewable definition, which means the contract is guaranteed to renew, and people confuse to age 65 for the renewability feature versus the benefit period of 5 years. So once you lock into your policy, it's guaranteed renewable, usually through retirement age.
Well, talk about the difference, because I thought when you said 5 year, it's just 5 years. But now you're adding a little feature to short term that could be long term in disguise.
Well, it protects your insurability through age 65, but if you were to go on claim, the benefit period would pay you for 5 years, up to 5 years.
I kind of like that, because some people may say, I can't afford long-term now, but I like the option to be able to come in at the 61st month with my insurability, right? I mean, that's what I'm hearing you say, built into that policy, and now I can go back and say, hey, now I'm ready to I can't afford long. I've went up the food chain in management. I got a white-collar job now, maybe.
Right.
I got, I'm making more money. Now I'm ready to go ahead and see the value, and I can afford it now.
Right, and you can go as long as a 2-year wait on the long term. So you would, if you went with a short term and then at some point you wanted to do a long term, the premium would go down considerably to have a 2-year wait on your long term disability.
Can you double dip on that? Can you buy a short term DI to cover the first time period of 2 years and then a long term?
Absolutely, and you would dovetail that. You wouldn't buy a 5-year benefit period on the short term with a 2-year wait. They'd have to take that into consideration to offset. But you can absolutely dovetail the 2-year.
I'm wondering, what is the math really, or if I have a 2-year short term and I dovetail that with a 2-year elimination period on my long term.
Right.
Have you seen a kind of a yin and yang on price tag on that?
Oh, absolutely.
Well, talk a little about that, because now I find that fascinating.
Well, think about it with our statistics we've already discussed. If the average disability is 30 months, then obviously the longer you're willing to wait for an elimination period, the less likely the long-term carrier would be in a claim situation. So it's hard. It depends on your gender, your age, and the ONOC feature. Some of those other features that drive the price. But just boilerplate, I would say it's probably at least a 20-25% difference to go from a 90-day out to 2 years. But those other factors, your occupation, your age, and your gender, play into that.
Well, I love the option of looking at short-term DI and then looking at short-term DI with a long-term elimination for long, disability insurance. I'd love to see that. And when you start saying, Steve, we should start quoting this. Listen, if you say, I just don't know if my client can afford that, but we might be able to tailor and customize a short-term scenario. And now we're even talking about a possibility of a long-term kind of dovetailing and using both. I love that idea. I love tandem selling. I always have, always will. Tomorrow we're going to talk about long-term. We're going to get into the wheelhouse of DI. You won't want to miss that. If you want to start selling in the white-collar market, tomorrow's show will be huge for you. Remember, you can watch all our shows by going out to our website at thebiz.tv. And don't forget to follow me on Twitter, Facebook, LinkedIn, Pinterest, and Google+. That's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.